All right, let's jump right into this. Welcome to The Explainer. Today, we're demystifying a name you've probably seen absolutely everywhere lately if you're watching that crazy intersection of Web3 and AI. Yep, we're talking about Gensyn. It's this highly anticipated decentralized network, and they are literally aiming to completely redefine how artificial intelligence is built, verified, and ultimately owned. So we're going to unpack the tech behind it, the tokenomics of the brand new AI token, and those wild market forces driving its valuation right now.
And speaking of valuation, well, let's start with the immediate market hype. When the AI token dropped on April 29, 2026, it didn't just quietly list, it landed simultaneously on the big players, Coinbase, Gate.io, and Binance Alpha. The immediate result? A massive day-one price pump of 65.18%. I mean, we literally saw a 67,000% volume spike in a single 24-hour window. That kind of synchronized demand shock tells us loud and clear that the market is paying serious attention to decentralized AI infrastructure. But, to figure out if this momentum is actually sustainable, we've got to look past those launch day candles.
Section 1. The centralized AI problem. Let's step back a sec and look at the fundamental issue Gensyn is actually trying to solve here. It really boils down to the dangerous centralization of computing power and data.
Right now, frontier AI development is, well, it's basically a closed-door club. A tiny handful of big tech corporations hold all the cards, the capital, the massive data centers, the proprietary models. Gensyn comes in and creates a completely alternative path. Imagine an open, permissionless marketplace where anyone, and I mean anyone, from a massive commercial data center down to a gamer sitting at home with a decent PC, can contribute their spare hardware to train AI models. It's all about breaking that compute monopoly and genuinely democratizing machine intelligence.
Which brings us to Section 2, how the network works. To pull off a vision this huge, Gensyn operates on a custom Ethereum Layer 2 rollup built with the OP stack. Basically, they're getting Ethereum's top-tier security, but with the lightning-fast speed and low costs you absolutely need to run a global network.
Now, what's really fascinating here is the REE, or the Reproducible Execution Environment. Think of this as the mathematical heart of Gensyn. See, standard GPU execution is kind of messy. It's non-deterministic. That means the exact same AI model, given the exact same inputs, can actually spit out slightly different outputs depending on the machine running it. But the REE? It forces what they call bitwise identical results. The digital output matches perfectly, down to the absolute last 1 and 0, no matter what hardware it's running on. And this is a massive deal because it lets Gensyn mathematically prove the work was done right, completely trustlessly, without needing some central authority breathing down the network's neck.
Let's see how this all connects into the broader ecosystem. The whole network rests on 3 foundational pillars, or core primitives. We just talked about the first one, compute, which is handled by that RE we just covered. The second is the data exchange, powered by the Agent Exchange Layer, or AXL for short. AXL is super cool because it provides peer-to-peer, end-to-end encrypted communication directly between AI agents. It completely bypasses those centralized cloud servers. And the third primitive? Information markets. Right now, this is highlighted by their live app called Delphi. Delphi basically allows for fully on-chain prediction markets where humans and AI models can trade information, and they get automatically rewarded by smart contracts based purely on how accurate they are.
All right, moving on to Section 3, tokenomics, specifically burn versus unlocks. Let's unpack the inherent tension built right into the AI token itself. So the AI token has a hard-capped maximum supply of exactly 10 billion tokens. If you look at the breakdown, the biggest slice by far is 40.4%, which goes straight to the community treasury to fund ecosystem growth. Then you've got investors holding 29.6% and the team keeping 25%. Now, here's the absolutely crucial takeaway. Right now, only about 1.3 billion tokens, literally just 13% of the entire supply, are actually circulating out there in the open market. And it's exactly this tight circulating supply that's amplifying both the crazy upside pumps and the wild downside volatility we've been seeing since launch.
But here is where Gensyn's design gets really clever. They've baked this highly bullish, virtuous cycle directly into the protocol. When users interact with that Delphi prediction market we mentioned earlier, a 0.5% fee is collected. That on-chain revenue doesn't just sit there. It's automatically routed to a buyback vault. This vault then goes out and swaps those fees for AI tokens on the open market. And here's the real kicker. 70% of those purchased tokens are permanently burned. Gone. This means that as actual, real-world usage of the network scales up, tokens are directly and permanently wiped from circulation.
However, we've got to keep it real and contrast that awesome deflationary burn mechanism with the somewhat bearish reality of their vesting timeline.
Month 0 was the initial launch back in April 2026. But fast forward to month 12, so April 2027, and we hit the unlocking cliff. This is a looming supply shock, guys. Massive allocations from early investors and the core team are going to start unlocking linearly and hitting the open market over the following 24 months. So for the price to hold steady, the network's burn rate and overall demand absolutely have to be strong enough to absorb all that incoming inflation. To put all this into perspective financially, at recent post-launch prices, the fully diluted valuation, meaning the implied worth of the entire 10 billion token supply, sits right around $600 million. Now, just speaking neutrally here, justifying a valuation of over $500 million? That's going to require the network to capture some serious, real-world GPU compute volume and lock in major enterprise adoption to sustain it over the long haul.
Okay, Section 4, the decentralized AI competition. Let's zoom out a bit and see how this network actually stacks up against its biggest rivals in the crowded AI and DePIN, that's decentralized physical infrastructure network space.
This breakdown really perfectly illustrates the competitive landscape. Because, while these projects often get lumped together, they are solving very different problems. Render, for instance, connects distributed GPUs mainly for rendering and inference tasks. BitTensor, on the other hand, is focused on building a marketplace where AI models actually compete for rewards. But Gensyn uniquely tackles the really heavy lifting of trustless AI training from the ground up, using that RE toolchain we talked about. At the end of the day, it's all about matching the right network to the right workload.
Moving on to our final section, Section 5, Price Outlook and Potential. Let's dive into an impartial market analysis. And hey, quick reminder, this explainer is based on analyst projections from our sources. It is absolutely not financial advice, just looking at the scenarios.
Looking at these analytical price targets, we're seeing a pretty wide divergence depending entirely on how well the network executes. To reach the base case of around 10 to 16 cents by Q4 2026 or hit that bull case nearing 28 cents, a few things have to happen. The token needs to hold key technical support levels right now. It has to sustain all that massive volume brought in by Coinbase and Binance, and crucially, it must expand enterprise adoption beyond just the initial launch hype. If the network stalls out, well, the bear case sees prices compressing back down into the 2 to 5 cent range as those early airdrop recipients decide to take their profits.
So what we're really looking at here is a massive tug of war. We can summarize the opposing market forces wrestling for control of the token right here. On the bearish side of things, you've got the immediate risk of airdrop selling, those looming 2027 investor unlocks we discussed, and of course, incredibly stiff competition from existing networks. But on the bullish side, the token is enjoying unmatched liquidity from top-tier exchange listings, they have a live mainnet with a working deflationary buyback mechanism, and there's huge potential for major new enterprise partnerships in the decentralized training space. As one of our market sentiment sources perfectly nailed it, the consensus on AI is cautiously mixed, balancing strong fundamental conviction against concerns over its rich valuation and wild volatility. And trust me, that volatility is no joke. We've seen the token swing dramatically between all-time highs of over 10 cents and lows near 3 cents, all within days of its launch. It is a high-conviction tech play trying to navigate a highly speculative, wild market environment. Ultimately, the initial narrative hype is going to fade, and the actual fundamentals are going to take the wheel. So I want to leave you with this provocative question to guide your own research. Will on-chain compute adoption and all those fees generated by applications like Delphi accelerate fast enough to absorb the looming 2027 supply shock? The answer to that question, which you'll only find by monitoring Gensyn's actual network usage, will be the ultimate indicator of its future success. Thanks so much for learning with us today on this explainer, and we will see you in the next one.